If your mortgage payment just went up because your property taxes were due at the beginning of the year and your escrow account was short, and now your payments are $200, $300, $400 more per month, listen up.
If you purchased a new build within the last 2 years only to see that your mortgage payment jumped up about $400 plus, this tip might be for you. It's called an escrow spread. Call your mortgage servicer, ask them, hey, my mortgage payment went up dramatically. I get that you guys applied an escrow deficit now, but can I pay that deficit back over 4 years? If you do this, they can potentially reduce your current mortgage payment by $100 to $200 without paying any additional interest.
An escrow spread allows lenders to assist borrowers in covering an escrow shortage, which occurs when there aren't enough funds in the escrow account to pay for property taxes, homeowners insurance, or other required expenses. Each year, the lender conducts an escrow analysis to determine if there's a shortage. Rather than requiring the borrower to pay the deficit in one lump sum, the lender distributes the shortfall across 12 months, incorporating the additional amount into the borrower's monthly mortgage payment alongside the regular escrow contributions.
Hundreds of thousands of defaulted mortgage borrowers using taxpayer dollars, and this was just exposed by the Wall Street Journal. And if it's reversed, it has the potential to cause a massive cataclysmic housing downturn in many cities and neighborhoods across America. And the big issue is the FHA mortgage program, the first-time home buyer mortgage program, where you could put 3% down to buy a house. This mortgage program now has a 14% default rate. The default rate's 13.5%. Over 1 million mortgage borrowers on the FHA program are currently in default, and the Biden administration basically was blocking these defaulted mortgages from going to foreclosure.
President Biden is extending a moratorium on foreclosures of federally guaranteed mortgages until June 30th. The president has also extended the enrollment window to request a mortgage payment forbearance, which allows borrowers to pause or reduce mortgage payments until the end of June. However, the actions announced today don't address a federal moratorium on evictions of tenants who've fallen behind on their rent. That's still expected to expire the end of next month.
The Biden administration was doing was that when a mortgage borrower went in default and claimed financial hardship, they stepped in and made the mortgage payments for them. Or they tacked the mortgage payments onto the back of the loan so the borrower has more debt. And this has been something that's been artificially inflating the housing bubble and preventing the foreclosures and the listings from hitting the market.